All right, my name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. Today I wanted to talk about claiming dependents and claiming kids, specifically if you are of a higher income household. Your household brings in maybe between 150 to 200K and up annually. You may want to think twice about claiming your kids as dependents, specifically if they're in school. Prior to going to college, that's fine. But once they get into college, if you're in that range, 150, 200K and up, it might be of more benefit to you as a household, including the child, to not claim the child as a dependent and have the child file on their own and not being claimed as a dependent. But there's a couple reasons behind that I wanted to outline. One is when it comes to scholarships. So let's say if you are fortunate enough to have a child that has received a full scholarship to school. Now, what surprises a lot of families is if you're fortunate enough for your child to get a scholarship that covers everything, tuition, room, and board, while the tuition part is not considered taxable income, the room and board part of a scholarship is deemed taxable income. So what I've seen happen, let's say a child does receive such a scholarship and the parents go to claim them, and then they wind up having to report this income on behalf of the child. And if it's a full scholarship and it's room and board, we're talking with some school tens of thousands of dollars. So some of those parents wind up getting dinged and having to owe quite a bit of taxes on their child's scholarship. So it becomes a pretty big surprise. Now, if that child had claimed it on their own, because technically the scholarship is theirs, not the parents', the child does have an opportunity to just file independently and not be claimed as a dependent. That income will be taxed at the child, but more than likely that child is going to be in a lower tax bracket than the parents, on the assumption that the parents have their incomes and these tens of thousands of dollars are just added on to that full-time income. So parents are more than likely going to be in a higher tax bracket versus if those tens of thousands were entitled to the child, they're more than likely going to be at a lower tax bracket because they probably don't have a full-time's worth of income. And that way they can take the standard deduction, which for 2023, I think it's going to be close to 14K. Assuming they have no other income other than this, that first 14K is going to be tax-free, and then they would just have to pay the taxes on the rest. So it's a good way to reduce the tax burden if you're fortunate enough to have a child who received a scholarship. If that scholarship includes room and board, that's the taxable portion. Again, scholarships that cover tuition are considered taxable. And for those that are actually paying tuition and don't have a scholarship, you still may want to have that child file on their own and not continue to claim them because of the educational credits and deductions that one is entitled to. You have educational credits that are available to taxpayers based upon tuition that they've paid for colleges. However, those credits are not available to those that earn a higher income. So if you're above that threshold, for folks filing jointly, I think it's about 150K. I believe it's half that if you are filing alone. So if you're a single parent household, I think that threshold is 75, 80K, 150. But once you start getting over that threshold, you don't really get those credits, or they're extremely limited without getting too deep into what it is, but they're limited. Now, if that child was filing on their own, they more than likely fall under those thresholds. You get the full benefit of those educational credits because they're filing independent and their income thresholds would probably benefit from that. So it's a good way to maximize your education credits or minimize your tax liability if you're fortunate enough to get a scholarship. You may want to consider having a child file on their own because, truth be told, once the kids get to school and get over 17, 18 years old, with the tax law changes that happened in 2018, there's not too much of a benefit that you can get from claiming children as dependent. Once they get over 17, it wouldn't have that much of an impact, at least on the federal level. state level might be a little different, but I think the benefits that you would get from exercising the education credits and reducing the taxability of the scholarships would probably far outweigh the benefit that would be available to you through the states. So definitely something to consider. Take a look at your full situation, and once those kids in college, you may want to let go of them as dependents. So that's all for now. So if you have any questions about this particular topic or any other accounting or tax related questions, feel free to reach out. I'm happy to help. All right, I'll see you in the next one.